Welcome to the Morning Download Podcast, your go-to resource for personal finance, economics, and market insights. In just 8 minutes a day, we provide valuable information to help you make better money decisions. Don't forget to sign up for our free newsletter at https://www.morningdownload.com/subscribe. Let's dive right in. In today's episode, we'll cover the stagnant market during holidays, the state of the Canadian economy, Tesla's future and challenges, saving $5 million for retirement, and Benjamin Graham's motto for sound investment.
It looks like Canada is facing some challenges at the moment. Their economy unexpectedly dropped 1% in Q3, and the GDP per capita has also fallen 4%. However, experts are cautiously optimistic and don't believe a recession is on the horizon. Now, there are a few other issues the country is grappling with. Canada's inflation rate stands at 1%, and the cost of shelter is skyrocketing at 6% per year. There are concerns of a potential housing crisis in 2024, particularly in cities like Calgary, where rents have risen by a staggering 2% in the past year. Another problem is unemployment, with 8% of the population currently jobless. It's worth noting that Canada heavily relies on immigrants to support its workforce. On the bright side, the stock market has been performing well, and most experts have a bullish outlook. Turning our attention to some global headlines, let's start with the Apple Watch. An import ban on Apple Watches has been temporarily halted by a U.S. appeals court. Meanwhile, the New York Times is taking legal action against Microsoft and OpenAI, the creators of ChatGPT, alleging copyright infringement. And in Japan, a Toyota-owned automaker has suspended production after admitting to tampering with safety tests for a shocking 30 years. Rumor has it that Tesla is gearing up to release an upgraded version of its super popular Model Y straight out of Shanghai. This revamped model is slated to hit production in 2024 and could potentially attract even more investors to hop on the Tesla train. Although the company is expected to rock another record-breaking quarter in terms of electric vehicle deliveries, it may fall short of Elon Musk's ambitious goal of hitting 2 million units this year. Now, as you may know, Tesla has been making headlines for reducing prices in various markets to boost sales and grab hold of new territories. However, they've faced some stiff competition in places like China, where BYD has become a major player. But don't fret, because in the good old US of A, Tesla remains the undisputed leader in the electric vehicle game. That being said, there are a couple of challenges on the horizon. Tesla will have to navigate the loss of federal tax credits for some of its cars in the US, and the premature end of Germany's EV subsidy program. These factors might lead to more price cuts, which isn't always music to investors' ears. Now let's dive into the world of pharma for a moment. Yesterday was quite eventful in the pharmaceutical industry. Iovance Biotherapeutics took a bit of a tumble, dropping 19% after regulators placed a clinical hold on its LN-145 treatment for non-small cell lung cancer. On a more positive note, Coherus Biosciences experienced a whopping 23% spike in stock prices after the FDA approved its on-body injection system aimed at preventing chemotherapy-related complications. And last, but certainly not least, Cytokinetics soared a staggering 83% following the success of its heart drug in a highly anticipated trial. Isn't it fascinating to see how the world of stocks and pharmaceuticals can sway so dramatically? So let's talk about personal finance. It's a topic that can sometimes be daunting, but it's essential to get a handle on it to secure your financial future. Today we're going to address a common question. How much do you need to save to retire with $5 million? Now, having $5 million in the bank is a dream for many Americans, but sadly most are far from reaching that goal. The average net worth for people between 55 and 64 is only $1,175,900. However, we believe this figure is not entirely reliable. In reality, most people have even less money in their retirement funds. Shockingly, the average U.S. resident aged 35 and under has less than $30,170 in retirement savings. So let's get down to the numbers. Americans generally think they'll need at least $8 million to retire comfortably. But what if you could have $5 million? It all comes down to how much you save and where you invest. If you start at 21 and wish to have $5 million by the time you reach 67, assuming your money offers a 5% average annual return on investment, ROI, you will need to save around $2,324 per month. If you start at 25, that number increases slightly to $2,922 per month. And if you start at 30, it goes up to $3,905 per month. The key takeaway here is that you need to start early if you want to save less per month. Additionally, if you can increase the return on your investments, you can reduce the amount of money needed to save each month. Now, it's important to note that you don't necessarily need $5 million to retire peacefully. This number simply represents a substantial amount to have in your retirement fund. It might seem intimidating, but remember, it's all about setting smaller goals and gradually working your way up. So go ahead, start planning for your financial future today. Benjamin Graham once said, and I quote, "Confronted with a challenge to distill the secret of sound investment into 3 words, we venture the motto, margin of safety." Now, let's break this down. When it comes to investing, Graham knew a thing or two. And what he's telling us here is that if you want to be successful in the world of investments, you need to keep one thing in mind, the margin of safety. Now, you might be wondering what exactly this margin of safety is. Well, it's all about minimizing risk. See, investing can be a bit like walking on a tightrope. You don't want to take unnecessary risks that could lead to disaster. So, by having a margin of safety, you're essentially creating a buffer. It's like having a safety net in case anything goes wrong. Think of it like this. Let's say you're investing in a company. You want to make sure that even if things go south, you won't be completely wiped out. That's where the margin of safety comes in. It's a way to protect yourself from potentially catastrophic losses. So, my friend, next time you're considering making an investment, remember the wise words of Benjamin Graham, and always keep that margin of safety in mind. It could be the difference between success and failure.
In today's episode, we discussed a variety of topics, including the stagnant holiday market, key insights on the Canadian economy, Tesla's future and saving $5 million, as well as the latest updates on the housing crisis, unemployment rates, and stock market trends. We also explored exciting developments in the pharma industry and uncovered the importance of starting early and increasing ROI for retirement savings. Finally, we examined Benjamin Graham's timeless advice on sound investment with his motto, margin of safety. Thanks for tuning into the Morning Download, your go-to podcast for personal finance, economics, and market insights in just 8 minutes a day. Don't forget to subscribe for more helpful content and sign up for our free newsletter at Morning Download. Subscribe.